Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, January 30th, the year 2018. Next. You're probably wondering, next? What's that got to do with trading? Well, everything. I mean, what happens next, or maybe what happens after, that's pretty important. Meaning, you put a trade on, what happens next? Well, you sit and you wait. We talked about waiting yesterday. And you just wonder what happens next. Because if it's what you like, then maybe you take profit. But if the trade goes against you, what happens next? Well, maybe you stop out. You're sitting and waiting to stop out. Maybe you scratch the trade. Maybe you try and trade your way out. So next is a lot what people focus on. But the thing is, you need to focus on the moment. Not the next moment, but the current moment. And that's where traders get into a pickle, let's just say. Because you're so focused on what might happen next, you might be missing out what's happening now. You know, for example, I like to trade reversals. So that means I wait and I wait for, a high to establish, a daily high, weekly high, monthly high, yearly high. And then you wait for the reversal to happen. But in the meantime, I could be going with the flow, but I like to wait for the next thing. Sometimes that works out, sometimes it doesn't. I mean, that's just the way trading is. But sometimes I kick myself. It's like, yeah, you just waited 100 pips for it to reverse. Why weren't you on this, why didn't you hop on that freight train? So sometimes, or most of the times, or really all the time, you should be focusing on now, not next, but right now, and correctly identifying what price is doing. Not what price is going to do, but what price is doing. So that being said, let's start looking at some charts. But before we do, the old money and risk management screen. I know, I've been doing it every day, and I'm going to continue to do it every day because it's basic. And for those just tuning in, they need to see it. Okay, next. Well, what happened with the weekly here on the euro? Well, first we noticed all the gaps filled, but the euro went down to here, and now it's back up here. So you see it crossed this line. Now, of course, if you're looking at weekly chart, it was red until it hit here, and you can see it's between, or it's in the wick of last week's candle, the previous week's candle, right there. There's the wick zone. Price is in the wick, and we know price doesn't like staying in the wick. Just doesn't. I mean, how many times do you see price staying in the wick? Well, I see one. I see two. But most of the time, price is outside the wick. Okay, well, actually, right here, it's outside the wick. Price outside the wick. Okay, price inside the wick. Because you look to the candle to the left. Okay, price outside, price outside, price outside the wick, and etc. Anyway, what's happening now? Price is going this way. Made a low, reversed, it's heading that way. So if price isn't moving lower, it must be moving higher. If it's not moving higher, it must be moving lower. And we see we've got some nice ranges here in the euro and some pound pairs. And looking at the daily, You can see here price barely put in a lower low. So anybody looking to take that breakout got your fingers burned, but that's what happens. And you see here we're breaking out the other side. In fact, I'm thinking I might need to put up a dashboard where we look at the price in relation to yesterday's high, yesterday's low, as opposed to the current. And that's just a simple change. You just say 1 bar ago for the high and the low. Now we look at the buy zone, and you can see here might have gotten your fingers burned, paid off here, paid off again. You can see here it paid off. You see here we crossed the weekly open, pulled back, crossed it again, came back, and then crossed it again. A lot of action right here around the weekly open. Weekly open crossover, daily open crossover, and with the buy zones. And looking at the rat zone, you see we put in a low here. The zones look like they probably had enough room. We reversed off of here. We put in a high. We went through the zone, came back up, but there were pips to be taken right here. Whoa, how'd that happen? And we've got the pivot. You can see the open was right near the pivot. So there really wasn't much of a trade there. See, we came down to S1. We moved up past the R1. And we're past R1 at the moment. Price action. What can I say? Red, green. Price breaks the high. Green at the line. I mean, the price action. We got higher lows, higher highs. It's once again, it's simple. You know, green, red, reversal. Over 10 pips profit if you took it. Looking at yesterday's 5 lines once again, you see the break here. It's just not that difficult. You see here we put in we went just slightly past yesterday's low, and then price screamed right back up through the lines. Didn't matter what time you started, but you just trade when you're looking at the line, and it's simple. Very, very simple. So right now it's like, well, you can see it's crossing here, so waiting. What's going to happen next? No, you're going to focus on what it's doing now. Maybe you get a few pips, maybe you get a lot, maybe you stop out. But focus on the now. Now, you see price exited what? The wick zone. Price doesn't like staying in the wick zone. Happens every day, guys. Every day, traders. I show it to you every day. It's up to you to click the mouse. And here we've got the lowest open zone, highest open, holo zone, and once again you see what happens. Every day, same thing every day. Squigglies, well, I guess if you're riding a squiggly, there it is. And since I opened the chart, which way's price going? It's simple. Price is going up. You see right here? Started there, price is going up. This isn't difficult. Not difficult at all. And I was showing you about the do not trade indicator, and I forget which. Okay, what was the other one we had here? Oh yeah, the don't be an idiot indicator. I call these training wheel type indicators, where they're just reminders depending on what you want to do. And so let me look at this one again, because I don't quite remember how we set this one up. Okay, I believe this one, you don't trade against the hour candle color, and you don't trade against the, or no, maybe I think it's the whatever time frame you're looking at. Let's see. Yeah, okay, yeah, it's whatever time frame you're looking at. So in this case, don't want to trade against the M1 open here on M5. So you can see here, depending on what time frame, you're taking your point of reference, which way you want to trade. Daily, weekly, and monthly. And I just have these set 2 pips apart. Reason being is you can look at the spread here, the spread dots, and there is somewhere between 1 and 2 pips usually. Okay, these are the spread dots. Bid, ask right there. So in this particular case, you see price came down in here. So if you get in here, chances are when it's climbing the ladder or walking up the steps, you can at least get your 2 pips here. Sometimes you might get 4, you may even get 6. Then when it comes down here, looks like it wants to come back down, usually you can capture at least 1 spread worth of pips. Now somebody say, why are you looking to just make 1 or 2 pips? Well, because you can. That's why. Some brokers don't like that, but on the ones that allow it, especially if you're trading heavy, where every pip might be $100 or $1,000, you might not want to be in the trade that long. So it's just something to consider. But you can see, rather than waiting for what's going to happen next, you can take advantage of what's happening now. So basically what you want to look for is, if you see the 2 ball here or 3 ball, chances are price is going to reverse out of that, out of this 2 pip zone into at least the next 2 pip zone. So chances are you should be able to cover the spread plus another pip or so. It's not that difficult. But this is for the pure scalpers. And once again, the do not trade, looking for reasons not to trade short, reasons not to trade long. And once again, looking at the tick chart, you can see here, this was since opening the chart, this was the highest price made by the bid. As you can see here, the ask went through it. When the ask is above it, of course, but this is the highest the bid went. And so you can see here, when the ask crosses down below the bid, that's when you can make the trade. When the bid crosses above the lowest ask, right here, and you can see how the lanes change. So if price is going up, it's making higher highs on the bid right here, and as the ask goes down, it's going to make lower lows. And when the bid crosses above the ask, that's